Hello. Today is Saturday, July 15th, 2023. I am Jason Shapiro with crowdedmarketreport.com. This week I thought I would just go over what my portfolio did this week, because I think there was a couple interesting things that went on and I had very few positions on, so it's kind of easy to look at why I had each one of these positions on, and then again how it looked sort of on a portfolio basis. And it's kind of good because there was a loser and a winner, so we can kind of look at both of those as well. And there was also a hedge, so we can talk about why that case happened as well. So an interesting week to take a look at this, and a simple week to take a look at it. So the first thing that I had on was I was short the British pound, and I got short the British pound on this day right here, okay, which was June 22nd, all right? And the reason for that was this was the British pound commitment of traders, which showed speculators very long, commercials very short, which is what I like to see first before I put a trade on. And then I look for a sort of confirmation / news failure event for actually putting the trade on. And we had that, to me, on this day of June 22nd, which was a day when the central bank, the Bank of England, came out and raised rates higher than expected and were more hawkish than expected. And this should all be bullish British pounds. And you can see what we had there was the British pound sort of reached a new high, failed, and closed down on the day. So I short it on the close of that day. There's my news failure in a market that's crowded long. And my stop is the day's high. So the close on that day was 127.50. The high of that day was 128.74. So I'm risking let's call it 24 points, right? Which on $624 a trade, that's a full point for the British pound futures contract, 1.24 times 625. So I'm risking $775 per contract. So just to make the math easy, let's say that the portfolio is $10 million and I'm risking 70 basis points per trade. So I'm risking $70,000. So if you take that 775 and you divide that by the $70,000, you're looking at 90 contracts. All right. So I short 90 contracts on the close that day, and I'm either going to ride that until the commitments of traders gets back to neutral, in which case I'll get out, or I get stopped. So in this case, the market went down for about a week and it was looking good, and then it sort of turned back and was not looking so good, and then it went out and took out my stop. On this day, July 11th, it took out my stop. So I get stopped on the close of that day if the close is higher than the previous high of my entry day. So the close on that day was 129.32, which was a little more than I was expecting on my stop, about half a point more of slippage. So I ended up losing a total of $102,000. It comes out to $102,375, right? So if we take 102,375, divide that by the $10 million account size, just over 1% when I was looking to risk, 70 basis points. So quite a bit of slippage there. And you can see it's because it closed so close to the stop on this day, and then it gapped and was strong the next day. So that's what I lost, $102,000 on that particular trade. Now, at the same time as that, I did a yen trade a little bit later. So I did a yen trade, which again, we can see, just to make it consistent here, you can see that speculators are real short yen, commercials were real long yen. I'm looking to get long in that case, right? And on this day, right here, which was June 30th, right, we had a Bank of Japan meeting, and they were more hawkish than expected. And the yen went down and made a new low and ended up closing up and on the high of the day. Again, this is June 30th. So I get long there. It closed at 70.12. The low of the day was 69.76. So I'm long at 70.12. I'm getting stopped at 69.76. I'm risking 0.36 of a point in the yen futures. So 0.36 times your 1250, which is what the full point is, I'm risking $450 per contract. So if I divide 70,000 by 465, I get 155. So I'm long 155 yen contracts there, right? And with this one, it was good because kind of this is when the pound first went down. So the pound went down. I'm getting long yen here, down here. And then the pound went up. I got stopped, but the yen went up and I made money. So this one I am still in. And just to do the math, it's up about 2.65 points since I entered, which is over 7 times the risk. I was risking 0.36 and it's up 2.65. It's over 7 times the risk. The reward is over 7 times the risk, which is what we're looking to do here. And that's in, 2 weeks. And so that trade, at least to this point, has made about $513,000 on a $10 million account. So made $513 on the one, lost $102 on the other. It's over a $400,000 profit between the two. It's 2 trades, 1 loser, 1 winner. Same thing, same process, same risk type of thing. And it's a 4% gain for the portfolio over the course of about 3 weeks, which is very, very good for me, So I'd make a couple comments. First of all, let's go back to the pound trade, right? The thing about this pound trade is that it lost money and that's never any fun. But from what I do, okay, I am a counter trend trader. My return stream offers a negative correlation to sort of trend followers and other things. If you're a trend follower, you are long pound here. Essentially what I do if I short it here is I'm getting you out of pound, right? So you're now flat. So I saved you this loss down here. And then as I get stopped, your trend following is still long, so you're back long. So what I ended up doing was costing you about 1.5 points, right? Because I got you out and then you get back in because I get stopped out of my short, so you're still long. I cost you about 1.5 points or whatever. And I saved you, about 0.75 or whatever in a drawdown. So that's kind of how it would look as an isolated event, right? So you're going to say, well, you cost me 1.5 points, so what the hell good did you do, right? But on a risk-adjusted basis, over time, where you might have made a little bit less money on this one particular trade, your volatility went down by much more than your returns did. So on a sharp basis, it's helped you, which is great. As a single trader, you're like, who cares? I just want to make money. But on a portfolio basis, it matters. And in particular, it matters over time. Now on the yen trade, and this could go back down and stop me out just like the pound did after it made me money originally. Who knows, right? But again, if you're in the yen trader and you're a trend follower, you're short here. So I'm essentially getting you out of your short here. And so you miss this whole loss. So that kind of works as well. But again, even though the pound lost, the yen made, and the yen made a lot more than the pound lost. So net, it's a 4% gain. So this is sort of a good thing, obviously. Now it gets into another thing. I start to look at my portfolio and I say, well, gee, I'm short British pound. I'm long yen. So I'm essentially, short pound yen or whatever you would call that, long yen pound, And being that the pound is highly correlated to the euro, you could essentially say I'm short euro yen. And I know that euro yen has traditionally been a risk on trade. So if I'm short euro yen, and that's all I have in my portfolio, I'm essentially, in my eyes anyway, short risk. It didn't turn out that way because the yen went up even though risk went up. Usually the yen will go down when risk goes up. The yen went up even though risk went up, which I will tell you, in my view, is because of this massive positioning against it. Even though risk went up, the yen still went up, right? And there has been no news to confirm why the yen should go up even to this point, right? It just has. And I, again, believe that's because people are so short, but whatever. The point is I'm short, let's call it euro yen. It's pound yen, but let's call it euro yen just for argument's sake. But I'm not bearish risk. I don't see that risk is going down. I don't believe the stock market's going down anytime. So the whole time I'm thinking to myself, what can I do to hedge this? These are the only 2 trades I have on. It's essentially one trade, short euro yen, short risk. What am I going to do if risk goes up? Well, I guess I could get long some stock indices. I guess I'm not sure what to do. I don't do anything about it. I watch the markets. And so this starts working even as risk is going up. So I'm like, okay, I don't have to do anything to hedge because it's working anyway. So why even deal with it? But we come into CPI on Wednesday, and it's clear that everybody's looking for the CPI to come in pretty weak, right? But by the Tuesday close, it was clear that that was consensus. And so my thought was, and by that time I got stopped out of pound. So now all I am is short, all I am is long yen, which I am still believing is a risk off trade. So if CPI comes out weak and risk goes on, what am I going to do? So what I did was on the Tuesday close before the CPI release on Wednesday morning, I bought some stock. I bought some Russell, which on the COT was the least crowded, or where speculators were most short. It's not super crowded, so I'm not long on its own, but I just put the hedge on going into CPI, thinking that if everybody is going to believe CPI is going to be weak, then there's a good chance that these stock indices are going to run up into the number, and I'll probably be able to have some profit going into the number and be okay, right? So then if the number comes out stronger, well, then maybe risk goes off. I make money on my yen. I'll lose money on this Russell. I'll cut the Russell and ride the yen and be okay. And what turned out to happen was the CPI came out weaker, and the stock indices jumped right after that, and I just got out of that Russell. I don't know, I made like 20 or 22 points or something on that Russell, which hedged my yen well because the yen didn't even go down that day. It tried at first, and then it went up anyway. So that's kind of how my portfolio worked this week. I hope that makes sense. I hope that's clear about how I'm doing it and how I'm thinking about it, and how I sometimes will override on a portfolio basis to hedge in certain occasions. It's not a lot. It depends on what my portfolio looks like, but sometimes I will do that. And that's really that's really the story there. As always, questions and comments more than welcomed, and we'd love to see you on crowdedmarketreport.com. And I hope that everybody has a profitable week this week. Thanks a lot.